Hey guys, welcome back. And today we're gonna start a new chapter, which is gonna be fair value gaps. It's easy concept and it's easy to understand, and the best part of this, it's easy to use. We're gonna use fair value gaps to make our entry points. I'm gonna show you difference between bullish and bearish fair value gaps. Also, we're gonna talk about the inversal fair value gaps, but all this column, all of this chapter, it's gonna be strictly about the fair value gaps, because you need to know this information and you need to know how to enter the trades. So let's get into the charts. With the fair value gaps, is not hard to understand. What we need is few candles. For example, we have something like this, and like this. Yeah, 3 candles for you to get an idea. We had a wick, for example, here. We had some wicks here, and we had some wicks here in the candle. Yeah, we know the candles, you understand that. And the fair value gaps are in the middle of the candle. What I mean by that, you see the first candle and the third candle. We're looking in the middle from the first wick top and the third wick bottom. So basically it looks like this. Yeah, we're gonna change the color, it's gonna be orange. And tibbity-dabbity-doo, this is called fair value gap. Basically what it gives to us, it gives the imbalance. It means that in that particular moment, in that second candle, there was too much buyers in this kind of situation. And what we can expect continuation, something like this. The chart is going up, it's eventually gonna come back to balance the market, to check this fair value gap, and after that continue going up. The same goes with the downtrend. It's gonna be a little bit different. We can try to build it here. We're taking here. Okay, it's gonna be here, and we have wicks like here. Yeah, but in this case scenario, the candles are red. Yeah, this red candle, and the third one is also the red candle. You see the first one and the third one, and in between those we have a second candle, first and third. From wick to wick, we have the fair value gap. And what does it indicate? It gives us entry points. And I'm gonna show you some examples. I'm gonna try to find them. But yeah, let's go to the charts. And with the charts, we have, okay, we can look at this, yeah? Here. We had a huge candle going down. You see this one red candle, 64,400 to basically 63,800, so 600. Previous candle and the third candle. You see the first one is red, but still it has the wick, and the third one, it's a green one. Doesn't change the fact, we still have a gap which has to be filled. In this case scenario, the fair value gap would look like this. Bam, 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 and we can look that the price was filling it several times. It was filling it here, it was filling it here, and the last one was this one. And what did the price did after that? Going straight down. But this is a big example. Maybe it's possible to make an entry point For example, yeah, we can try to look for something like it was a consolidation, we was waiting, if it's respecting, going down a little bit, going up, and maybe at the start of the fair value gap, we have the entry point, we have the stop loss above the VIX, above our highest point, and the case if we are losing, it's gonna be if the institution's gonna try to take the liquidity. But that's the rare occasions, which is what I told you. And we, for example, targeting some lows. Yeah, this one's targeting this lows. So I take profit, supposed to be somewhere here, and we have basically 1 to 4 risk reward. So if you risking $100, you're gonna make a 400. Easy as that. And after some time, the market shows that this trade, this fair value gap was good and the trade was successful. Now let's try to look for other examples. For example, something here. Yeah, it was the bottom. We had some kind of the demand zone. Demand zone was respected, and here we have our fair value gap. Look at this, the first candle, the fair candle, and between the wicks, up and up. And what do we have? We have a nice entry point. The price was going up, making for us change of character. Going back, check out the price. We can enter the trade with the limit order, something like that, putting a stop loss below, and of course targeting something which is gonna be here, maybe the highest point. It's still 1 to 4.5 risk reward. We can try to target this one, and it would be much more greater. It would be something like almost 1 to 10 risk reward, which is enormous, but it's possible. It's really possible, you know. This is what fair value gives you. It gives you the entry points. So if you apply the information you know about the liquidity, about the supply and demand zones, support resistance, market structure, basic change of character and break of structures, and you have fair value gap, you can enter the trade. Look at this. You can continue to move forward. New fair value gap here, from here to here. You see the wick here. I'm gonna try to make like this, and this candle here also with the wick, and we have it between the wick candle down. We have the imbalance, and the market, what market does? Market goes a little bit down, and after that it goes to test that fair value gap, fill the imbalance, and after that it's going straight down. Once again, we could enter the trade, we could enter the short position, put our stop loss here above the VIX, and target the lows, for example like this. And we have nice 1 to 2 risk reward, which was amazing and it was successful. Not every trade gonna be like that. This is just looking for the history, but yeah, you can try to look for something more. Small fair value gap here. We have a huge points. You see, it's also possible to target something, but not all fair value gaps gives you 100% confidence. You still need to apply information you know. For example, this, we had a nice demand zone which was holding here, so double confidence, you know. Demand zone here, it's rejecting, it's starting rejecting. When we have the change of character, we have the fair value gap, the small one, the price came back, and you had a nice amazing trade. That's why you need to be patient. So yeah guys, thank you so much for watching. I hope you got that basic understanding about the fair value gaps. If not, reverse this video, look at that again, look at the drawings I made, and I'm gonna point it out that the first, second and the third candle, they're not supposed to be always in one direction. I mean green 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 or red red red. It can be red, red, and green. But if you have the VIX here and VIX here and the big body on the second candle, you can find the fair value gaps. It was on the first example, as I remember. So yeah, guys, check it out. You can take whatever time frame you wanna. The bigger time frame, it's much more easier to understand. So thank you guys for watching and see you in the next episode.